Corporate Finance OneNote Practice Problem. In this presentation, we're going to work a practice problem in OneNote related to Economic Ordering Quantity, EOQ. Get ready, it's time to take your chance with Corporate Finance. Here we are in OneNote. If you would like to follow along in OneNote, you're not required to do so, but if you have access to it, we are in the 722 Economic Order Quantity EOQ Problem 1 tab in the Practice Problems section. Closing this back out, we're going to have our information up top. We'll use that information to work through the calculations on down below. We'll be talking about, of course, the Economic Ordering Quantity, or the EOQ. Formula for the EOQ, Economic Ordering Quantity, is to the right. So as we go through this, it looks a little bit intimidating as a formula, but we'll break it down in a second. Let's think about it just in theory or in concept first. As we have seen in the past, when we're thinking about ordering inventory that we're later going to sell, the primary concern will, of course, be the cost of the inventory and ordering the proper amount of inventory that will line up to the projected sales that we have, not having too much, not having too little in terms of the amount of inventory to meet the sales, and then having the money, the financing, in order to be purchasing the inventory. So that's going to be, of course, the primary concern when we're thinking about the inventory is going to be the cost of the inventory. But there are other costs we need to be concerned with as well. These costs can be more significant depending on the industry we are in. They will be more significant typically as the industry gets larger. When we talk about larger companies that have more ordering process that will be taking place, these costs are going to be something that need to be taken into consideration. So that's going to be the ordering costs per order. So every time you make an order, there is some cost to that ordering process that's going to be taking place, and the carrying cost per unit of inventory, the costs of holding on to that unit of inventory. So let's first think about the ordering cost per order. So when we think about the ordering cost, that means we'd have to put together all the costs related to us processing the order. Note that if you have a larger bureaucratic type of company, just like any company will be as they get larger, there's going to be more checks and balances in terms of the ordering process to prevent problems that can happen like fraud or something like that, mistakes to happen, and therefore it's going to take more time and therefore more money in order simply to process the order. So we have to take those costs into consideration. They seem like they're going to be pretty small, but again, if you have a lot of orders and you have a bureaucratic system that you're putting into place, you're going to have a cost related to that. Now also note that coming about that cost or figuring that cost isn't the easiest thing, because you're looking at things like the ordering cost, like people's salary, their time that they're putting in place in order to place the ordering costs that they could be putting in some other place. So it's not as easy to quantify that costs, but it's useful to be able to quantify it, because then that'll allow you to do your budgeting process and find your optimal point for the ordering process, the optimal amount. Note that industry by industry could change, so people could look at industry standards to figure out what their optimal point or what the cost of placing an order would be. But still, even that, you probably would want to look at in practice basically how they came about, the function of what they did in order to figure out this number, and then apply it to your company, because every company will be different, meaning the ordering cost for every company will probably be different, and you'll want to know what the system is and then figure out your ordering cost. Now, note, if you're going to minimize the ordering cost, if this was the only factor that we were looking at and we wanted to minimize the ordering cost, and if it costs $4 per order, for example, and we have the projected sales that are going to be 40,000 units that we're going to sell, well, to maximize our costs or lower the cost as much as we can, we just make one order for 40,000 for the entire year at one time, right? And that would minimize this cost. If I made 2 orders, then it would cost me $8, right? If I made 3, right? We could see how that will work. But of course, that isn't the only cost that we need to take into consideration. And for example, it will be contrasted to the ordering cost per order will be contrasted to the carrying cost per unit. And this is going to be the cost of us holding on to 1 unit of inventory. Now think about what we're trying to do here is look at 1 unit of inventory, break down the cost of that 1 unit of inventory over the entire period, say a year, which is something, again, it's going to take some estimates for us to do. So we could look at industry standards and see what their number is, how they came about with this number, the carrying cost per unit. But again, we would probably want to look at how they came about that number within a particular industry, and then look at our system and think about and then do our own calculation, because again, every company will probably be different with regards to these two numbers. So these two numbers take some time to figure out a correct number for those two numbers, but you can see conceptually, once we have them, they're going to kind of balance each other out, right? Because if I ordered a ton of the 40,000 units and I minimize the ordering cost, then I would be holding on to all these units of inventory, and that would cost me for the carrying cost per unit, right? And so these things kind of balance each other out. So if we have a formula that could maximize the balance between these two, that is a factor that we can take into consideration when thinking about our optimal kind of ordering. So if these were the two factors that we were taking into consideration, they're canceling each other out, what would be then the optimal quantity that we would order? So what we'll figure out here is the economic ordering quantity, which will give us the optimal number of units that we're going to order at a time. And then if we figure out the optimal number of units that we're going to order at a time, we can then use that to figure out how many orders we expect to make in the year. So that's going to be what we will do. The formula will look like this. We got it to the right here. Economic ordering quantity is the square root. Is 2 is just simply 2 times D, which is going to be the annual demand. In our case, the 40,000. That's how many units, the units that we expect to sell and therefore purchase in the time period. Then we're going to take that times S. That's going to be the cost per order. In our case, it's going to be 4. That's not per unit. It's per order. Every time we make an order, what's going to be the bureaucratic cost of us just processing the order of it. And then we could have the denominator as the denominator is the holding cost. So we have the holding cost, and that for us is going to be 1.6. The holding cost is the holding cost for 1 unit over the time period, in this case a year, 1 inventory unit, not 1 order as up top as the $4 one, 1 unit of inventory. Now this one often is going to be calculated, you might see it calculated as a percentage of the cost per unit. So that's why we might have the cost per unit, and then you might have the holding cost as a percent of it. We here just simply have the holding cost per unit of the 1.6. And then we take the square root of that whole thing. Now, obviously, you can take these numbers and you can plug it into this formula algebraically. I think it's really useful to kind of see this break it out in like what we would see in like a tax return type of formula, a vertical type of formula. I think that's useful because it breaks down these concepts into 1-by-1 steps. It's also really useful if you expect or want to take a formula that gets a little bit more complex like this one, and then put it into an Excel worksheet in a step-by-step process. Very useful, because then you can change, say, the inputs over here. You can change these two numbers, particularly because these are probably the ones that you're going to be estimating most, and then look at the result of it. So you can start to think about how you would construct a table to put in a database or an Excel worksheet. I highly recommend doing this type of thing in Excel worksheets. It'll help you figure the formula for test questions if you need to. It'll also help you to think in terms of basically tables, putting this information into a table. So if I was going to put this into a table, I'm going to break this calculation out into a table. When I visualize something like this, I got a numerator and a denominator, and then I'm going to square root the whole thing. I'm just going to do it one step at a time. So I'd like at the outer column at the end of the day to have the total for what the numerator would be, the total for what the denominator will be, so that we can divide them out and then take the square root of it. Any subcalculations, such as the upper part here, I'm going to put into an inner column, and we're going to do the subcalculation in that format. So it's going to look like this. We're going to say we want the projected unit sales. So notice I'm not starting with 2. I'm going to start with the projected unit sales, which is D. So that's going to be D. That's going to be what we're going to sell over the year. And then I'm going to multiply that times S, which is the cost per order. So in our case, the ordering cost is 4. So the cost is $4 every time we place an order, in terms of just basically the cost of doing that process, placing the order. And then I'm going to multiply these out just as if we're putting it into a calculator, right? I could say D times S times 2, but I'm going to do a subcalculation every time I do a calculation, one step at a time, just like we might see algebraically, right? So I'm going to say 40,000 times 4 is the 160,000. That's going to be a subtotal now. Then I'm just going to take that and multiply it times 2, which is the next step in our formula. So we'll multiply it times 2. We're just building a table of the formula. And that's going to give us then our subtotal, or the numerator. That's why I'm going to put it in the right-hand side, the right column, of 160,000 times 2, or 320,000. Then we have the carrying cost per unit. That's going to be the denominator, or H. We're going to divide that by the 1.6. So if I then take the 320,000 divided by the 1.6, let's pull out the huge trusty calculator here. And we're going to say 320,000 divided by 1.6. We're going to get the 200,000. I'm going to call that a subtotal, because then we need to take the square root of that. So I'm just simply going to call it the square root of that. And if we take the square root, we're going to get to the 44721. And this could be rounded here. So 44721, that's going to be our bottom line number. That's going to be what we have for our economic ordering quantity. So that means to optimize the balance between these two things, the ordering cost, the cost per order, and the carrying cost, the cost per unit that we're going to carry, to balance out the optimal amount between these two for the 40,000 units that we need. We're going to order at any one time 447 units. So we're going to order about 447 units at a time. Obviously, we're not going to order, a part of a unit. That doesn't really make sense. But 447. So it's rounded to 447 units about that we're going to order. So then the next question is, okay, well, how many orders are we going to have during the year then? What's the number of orders that we're going to have? Well, if we need 40,000 units for the entire year, and every time we order, the optimal size we have just determined would be 447.21. If I take the 40,000 divided by the 447.21, we get about 89 orders. So we're going to need 89 orders. So in other words, of course, if we need 40,000 units, and we order every time 447.21 divided by 447.21, we get about 89 units. In other words, if I ordered 89 units times 447.21, that would give us our 40,000 units. So this is the number that we're going to use to optimize our units. Now notice this kind of assumes that we have some linear relationships, these costs being the same throughout the time period. So this is one factor that we can take into consideration. It does have, some limitations. We also want to think about, obviously how many units we are going to be needing per period, and think about whether we have a seasonal company or a company that's pretty much standard throughout the season and whatnot. But this is, you can see how this could be one useful factor to basically balance out these two items. Again, we'll do another problem here. We got the economic ordering quantity. We have the projected unit sales. This is for the entire year, 11,500. The ordering costs per order. So every time we place an order, no matter how many items we order, it costs us $14. So if we placed one order for the whole 11,500, we would minimize the order cost per order to the $14. But then we'd have a problem, because we would be holding on to the inventory, and it would cost us more in terms of holding on to the inventory. If we then say that we're going to take the 2 orders, then it would cost us $28, right? If we had 2 orders for the entire year, and so on and so forth. So we have to balance that out against the carrying cost per unit, which we're figuring to be 1.8. That's for 1 unit over the entire time period. And once again, these two are 2 things that would need to be customized for each individual company. You'd have to figure these 2 numbers out. You could use industry standards to do so, but every company will be different. So the more accurate these 2 numbers are, the better this calculation, of course, will be. So once we have those 2 numbers, we plug them into our formula, which is 2 times D, which is the annual demand, which is the 11,500, times S, which is the cost per order, which is the 14, divided by H, which is the holding cost. The holding cost can be calculated sometimes as the cost per unit times the holding cost percent. We just have the cost here, but just recognize that could be the case. We're going to take the square root of the entire thing in order to find the optimal ordering quantity size. In other words, how many units is the optimal number of units that we could order to balance out these costs. And then we can then figure out, well, then how many orders would we have throughout the year in order to get to the 11,500. So let's see that. I'm going to break this down into our table. Again, I think it's really useful. You can plug these numbers obviously into the formula, do your algebra within the formula. I think it's useful to start to break these formulas down into a table. If you put these formulas into a table and get good at it, you'll get good at building worksheets out of formulas and structuring tables. And these are going to be very useful skills. Many more people will start to see things in tables rather than in formulas a lot of times, because they're going to start building databases with this information, and these are really good for projections as well. So what I want is to build a table. I want the numerator and the denominator to be at the right side of the table once I am done with this. And then any sub-calculations I'm going to do on the inner part of the table, the inner columns. So I'm going to start in the inner column. We have the projected units. I'm going to start not with the 2, but with the D. And the projected units is the annual demand, the 11,500. Going to multiply that times the ordering cost, which is S, ordering cost, which is 14. 11,500 times 14 gives us the subtotal of the 161. Now note, I could have just multiplied it times 2 here, but I'm going to do it just like we would see it in a calculator. I'm going to multiply those two out, and I see a 161 calculation. Then I'm going to multiply these two out, and then I'm going to multiply that times 2. So I'm going to multiply that times 2, and that's going to give us then the numerator of the 322. So the 322 is going to be our numerator. Then we need the denominator, which is the carrying cost per unit, or H, and that's given to us at the 1.8. There's no sub-calculation, so nothing on the inside needs to be done here. Then I'm going to take the 322,000 divided by the 1.8. That gives us the 178,889, and that's a subtotal because we still need to take the square root, which I'm just going to say square root. And so we take the square root of 178,889 to give us the 422.95, which is the economic ordering quantity, that then being the optimal ordering quantity in order to maximize these two costs. So what does that mean? It means we're going to order 422 about, or 423 about units every time we order if we want to maximize, the balance between these two costs. So then you can ask, well, how many orders are we going to need throughout the year? Well, we got to get up to 11,500 in terms of the projected unit sales. So if I have the 11,500 and I order 423 about units every time, then we're going to order 27 times about, right? So because if I need 11,500 units and I order every time divided by the 422.95, then I need to order about 27 times. So you can kind of map this on to basically your sales projections and balance this out in terms of, will that provide you the units you need in order to make the sales, right? And so in other words, if I took the 27 times we're going to order, I'm going to order 27 times about, and I'm going to order 422.95 about units. Obviously, again, we're not going to order, 95 parts of a unit. But, you get the idea. We got to round. There's rounding, always rounding. And then we have the average inventory, the economic ordering quantity of the 422.95 divided by 2, or the 211.48. Now we're going to think about the total cost to order and carry the inventory. So in other words, we've thought about the optimal size that we should have in order to optimize the costs. Now let's figure out what the actual costs would be for these two items if we ordered that many units, for the ordering cost per order and the carrying cost per order. So we're going to balance these things out, you'll recall. So we're going to say, let's do the ordering costs first. So the ordering costs, we're going to say the number of orders that we're going to have, 27.19, which we calculated up here about, it could be rounded. And then we're going to say the ordering cost per order was, as we said, 14. So now we know the number that we're going to have. So it's going to cost us the $14 times the 27.19 orders that we will then be having. That's going to give us the 381. Then if we give the carrying costs, on the carrying costs, we said the average inventory is going to be 211.48. That's our average inventory we calculated up top. And then we said the carrying cost per unit is $1.80. So the $1.80 is going to be our carrying cost per unit. Multiplying the 211.41 and the 180 gives us the 381. So then if we were to add those two up, we balance them out. We got the total costs to order and carry inventory based on our calculations here are the 761. Okay, so let's do it again. Let's do it again here. We have the economic ordering quantity. So now we have the projected units that we're going to sell, 160,000. The ordering cost per order, 8. So that's how many times every order we make, it's going to cost us $8. The carrying cost per unit, so that's for one unit over the time period, a year, we're going to say here $4. And so we're going to balance these items out. So we have our economic ordering quantity. It's going to give us the optimal quantity to order at each time. To balance these things out, once we figure it out, we can figure out the number of orders we will need throughout the year. Formula is going to be the 2 times the demand, which is going to be the 160,000, S being the cost per order, and then divided by H, the holding costs, which is going to be the 4. So once again, we're going to break this formula down into our table, calculating the numerator, and then putting that in the outer column, then the denominator in the outer column, then taking the square root. So we have the projected unit sales starting with D, the annual demand, the 160,000. Putting that in the inner column, we're going to multiply that times the ordering cost per order. So that's going to be 8. So we're going to say times 8. And that's going to give us our subtotal here. So we're going to multiply these two out, give the subtotal, then multiply times 2. Multiply times 2, that'll multiply out these 3 numbers. Put that into the outer column because that's going to be then our numerator. Then we will then take up the carrying cost per unit, which is H on the denominator. We'll put that right on the outside. That'll be 4. We're then going to take the 2,560,000 divided by the 4 to give us the subtotal of the 640,000. That's going to be our subtotal because we haven't taken yet the square root, which is the next step we'll do, taking the square root of the 640, giving us the 800. That's how many units we would order each time we make an order. And so how many orders would we need to make if we ordered 800 units each time in order to maximize the ordering cost per order and the carrying cost per unit? Well, we would say, okay, well, how many orders do we need? How many units do we need? We need 160,000 units over the entire year. We're going to be optimizing our ordering quantity for 800 per order. That means that if I take the 160,000 divided by 800, we're going to order 200 times throughout the year. So to maximize our ordering, we want to order the 200 times to balance these costs, and we want to order 800 units per time. The average inventory then is going to be the 800 divided by the 2, which is going to give us 400. If we were then to figure out what our total cost to order and carry inventory would be, then we can think about the ordering costs, which we now know we're going to be ordering 200 times. 200 times is how many times we're going to be ordering. And we know that it costs us the $8. So the $8 per order that we will be making, that's what we've calculated. That's going to give us the 1,600 multiplying the 200 times the 8. Then the carrying costs, to figure the carrying costs, we're going to take the average inventory, which we figured out up top here at the 400, and we're going to multiply that times the carrying cost per unit, $4, which we have here, $4, that's our carrying cost per unit. And that's going to give us the carrying cost, balancing these out, the 1,600. If we add those two up, that's going to give us our total cost to order and to carry.